Hello everybody. I am Hélène Gonin, the event manager at your group, and I am very pleased to welcome you today to our second Analyst Thursday webinar dedicated to the Wafer fab equipment status. Before we start, let me give you shortly an introduction of the Analyst Thursday. It is a your group hosted online market and technology overview of some of our key areas of expertise presented by analyst teams. Every month, you have the opportunity to spend an hour with them and deep dive into the latest question from the industry. Today, you will be in good hands with John West, Semiconductor Subsystem and Test Senior Division Director, and Tanguy Yegoyan, Technology and Market Analyst for the Semiconductor Equipment activity. No more waiting. Let's start the webinar with John and Tanguy. The floor is yours.
Thank you very much, Helen, for this kind introduction. And we would like to show you during this 30 minutes of the webinar our understanding of semiconductor wafer fab equipment state and outlook. For that, we would like to share with you the answers for some questions. What is the status of semiconductor wafer fab equipment? What is its past? What is its future? And we would like to break down the revenue of these actors to various topics, such as equipment shipment and services and support, process technology, and device application. We would also like to overview their market share and focusing mostly on the market share from 2022, where we would like again to focus on overall understanding, process technology, device application, and regional. So let's start. So John, please tell me a little bit about the past, current status, and future of wafer fab equipment revenues.
Okay, Tanguy. Well, thank you for the introduction. Yeah, this is one of the most, well, it is the most exciting time for wafer fab equipment. We've never seen anything like this. The market almost touched $100 billion last year, and we're going through a bit of a downturn now, but the future is looking very good. But to really understand where we are and where we're going, we need to really take a quick look about how we got here. So this chart shows, I think, quite an interesting story, really, of what's happened in semiconductor manufacturing equipment. So pretty much since 2000 until 2015, you could characterize the market as being volatile, but relatively flat. But something happened in 2015. Has seen this extraordinary growth in wafer fab equipment, almost unbroken in 7 years. There was a bit of a dip in 2019, which was driven down by a memory price crash. But really, you can see that the industry has transformed from being around about $30 billion market up to this almost $100 billion now. And the question is, what caused the equipment industry to grow so much? And is it sustainable? Now, answers to those questions, we'll try and give you some answers later, but those are really the key questions that people are asking. And I think it's quite interesting that that growth period from 2015 to 2022, it coincided with many things that were happening in the world, but the closest correlation is with cloud computing. And that's all been enabled by the emergence of 5G and high performance computing, huge data centers. This infrastructure has been growing, and as it's getting bigger, it seems to feed on itself. And we've had this market just going through this huge growth surge until now. Now, clearly, we're in a bit of a downturn. Memory is driving capex down quite significantly, as is some for advanced logic. But the outlook for us is that, okay, we're going to have a short, sharp shock in 2023, followed by a little bit back to normal single-digit growth rates going forwards. The red line shows a more negative scenario where we have a 2 years of downturn and a steady growth from that point. But either way, it's an astonishing amount of money that's being spent on wafer fab equipment. So if you move to the next slide, Tanguy, we can just show you a bit more context for what's happened in the wafer fab equipment market. Okay, so this, obviously the wafer fab equipment market is very volatile. So to take out all of those surges in demand and collapses in demand, If you look at it as a 5-year rolling average, it actually shows quite an interesting picture. It shows really, again, what I mentioned before, from 2000, I guess, up until around about 2015, the industry really wasn't growing very much. And there was a baseline level of equipment spend around about $30 billion on average year over year. But again, you can see this very steady, strong growth trend from the 2016 to 2022, again, which we believe is driven by the rollout of cloud computing. But we don't think that that level of growth can actually continue. Our view at the moment is that this growth rate starts to normalize or stabilize at around about $80 billion a year, which is, again, a huge amount of money that even as far as 5 years ago, no one would have imagined that this industry could have sustained that level of spending going into the future. Now, of course, everyone thinks, well, is it sustainable? Well, here's just a couple of things that you might want to bear in mind. In 2016, the average cost of an 80,000 wafer starts per month wafer fab was about $5 billion. The same today is more than double that. So essentially, it has got seriously more expensive to manufacture chips. The good thing is we're actually delivering the price and performance that the customer wants, which is, again, sustaining strong revenue growth for equipment suppliers. Okay, so we can look at the market in two ways. So the data I've been showing you has just been for equipment only. This is showing equipment in the blue, and it's showing us also this equipment needs to be serviced and supported. And there's huge revenues coming from the install base that's out there. The story here with the wafer fab equipment is 2017, 2018, it was strong double-digit growth. We had, again, strong double-digit growth from 2020 to 21 as well. And if you look at that, the average compound annual growth rate from 2016 to 2022 was in the range of about 17% year over year over that 7-year period. And that's how we got to this $100 billion market. Now, clearly, we're seeing the market slowed down a little bit last year. Part of that was a slowdown in demand from the chip makers, but a lot of that was also supply chain constraints. The industry would have delivered more if it could have done. It's just that they were really coming up against some hard limitations, particularly for EUV, for example. There was a very constrained supply of EUV tools in 2022. And some of that will be corrected over the next few years. We're projecting a decline of 13% in 2023. I think if you add up all of the CapEx announcements from all of the chip makers, it looks more like -20. But when we talk to the equipment companies, we look at their order backlogs, we look at their current order intake, they're being more positive, and they're looking at a -10 to -15% growth rate in 23, and then followed by this more normal single-digit growth rate, and then another downturn either in that 2026 to 2027 timeframe. We would see that fall. The other really interesting story here is on that service and support revenues, already $20 billion at the moment, and that's only the service and support that's provided by the OEMs. There's a whole industry out there of third-party service and support suppliers that are even adding to that. So from a chip maker's perspective, they're spending a lot more than the $20 billion on service and support, perhaps $40 or even $50 billion to keep those machines running. But that's showing steady long-term growth. And if you look at all of the major OEMs, they see this as a significant source of steady growing revenues with very high margins. Okay, same data, just showing it broken out by the different types of equipment technology. The lithography in the red is the largest, and we expect that to consume a larger share of the equipment spend going forwards, partly because EUV tools are very expensive. I mean, they deliver a lot of value, but the next generation of EUV tools are going to be even more expensive, again, delivering a lot more value. But of course, that squeezes out the money that can be spent on other types of equipment. So interesting, essentially deposition and etch are also larger markets. Metrology inspection doesn't show up in here very much, but we see, I think that's also starting to show some growing slightly faster than the overall wafer fab equipment market as a whole. Okay, looking more near term, clearly the market was growing for multiple quarters up until Q3 in 2022, and I think we got the first warnings that the downturn was for equipment anyway was starting to happen back in August, when Micron started to post some negative outlooks about, and certainly we saw certainly memory prices were starting to fall. And sure enough, shortly after that, we saw that the equipment market started to cool off a little bit in Q4 last year. And now we're seeing a very rapid decline in equipment sales in Q1. Now, the question is, does that continue to fall, or do we see an uptick in Q2? Speaking to people in the supply chain, I think there's still a lot of order backlogs out there. The industry is still mostly profitable, so there's still a lot of money out there to buy equipment. So this is really a timing issue. So for us, we see a bit of a recovery in Q2, Q3 as everyone readjusts, followed by a few soft quarters and then a steady recovery all the way through 2025 and onwards. The other key thing here is we're seeing over the past few quarters, the spend on lithography has been increasing, and as we look forwards again, where we see the order outlook or the sales outlook from ASML and others is showing that they've got some very big revenues coming in over the next several quarters. Okay, so I'll hand over to Tagwi now, if she can talk to you through about the wafer fab equipment market by device application.
Yes, exactly. That's in another way that we can break down the overall revenue of the equipment makers from shipment of the equipment. So here, if we look at this, the same number overall, but broken down by device application, we can clearly see that the device application generate most of the revenue are logic, indicated in green, and memory, indicated in yellow. Now, there is also two smaller parts of these bars that are generated from specialty and advanced packaging. Specialty is the type of the device that otherwise we call more than more. It can contain MEMS, RF, power, optoelectronics such as CMOS image sensors and LEDs, photonics, and all the large group of different devices than logic and memory. Now, advanced packaging will be, it was very small, now it grows a lot, and it became a platform by itself. We consider it as a platform because it is used to package all types of devices, memory, logic, and specialty. So we would like to focus here on specialty and advanced packaging parts.
Actually, Tagwi, before you go on, can you just go back to the previous slide? I think the really interesting point of this slide, or one of the interesting points in this slide, is almost all of the volatility is coming from demand for memory equipment. So you can see in 2019, it dropped significantly from 2018. And we can see also in 2023, it's dropped significantly, almost half of what it was in 2022. So throughout all of the volatility of the equipment industry, the logic and foundry is less volatile and is growing, but also it doesn't show up very well in this chart. But for the specialty and advanced packaging, those markets are growing in line with logic and foundry, or even growing faster than them, which is why, even though those markets are still relatively small, they are growing at very strong, sustainable growth rates. So sorry about that, Tagwi. Continue.
Okay, so we would like to focus on specialty and advanced packaging, as these smaller market segments are usually being overlooked by analysts. So among all the devices that we would like to overview in specialty, devices are compound semiconductors, that have a lot of inflection points. So here I'm showing you the drivers for the growth of the compound materials in the space of power devices. You can clearly see on the graph on the left side of the slide that silicon carbide gallium nitride competes with silicon in the region of the higher frequency and higher power for the appliances for white goods as well as industrial and defense and aeronautics. So for that, we can imagine that there will be many more devices being made, but these devices are also more expensive because its manufacturing is not so established. So in the terms of revenue that will be generated for power devices, that is the graph on the right side of the slide. You can clearly see that silicon carbide and gallium nitride are growing in importance in comparison to silicon at the horizon of 2027. Sorry. Now, so equipment makers will have to adapt, will have to quickly come up with the equipment that will serve silicon carbide and gallium nitride, and this equipment has to have several features. So there has to be a growing number of equipments to be able to satisfy the production capacity increase by many players in all supply chain of compound materials, from the substrate, silicon epitaxy, silicon carbide epitaxy, chip processing, and so on. It's the same for gallium nitride. That's one reason. And then the other reason is that there is a transition of the wafer size, both for silicon carbide and gallium nitride, to 8-inch wafers. This implies that equipment will need to be adapted to 8-inch wafers, but also to the characteristics of such compound materials, such as brittleness, transparency, and roughness that is much higher than for silicon. Another part that I would like to focus is the advanced packaging. Advanced packaging is a growing market. We expect it to grow from almost 40 billion in 2021 to almost 80 billion in 2028 with a CAGR of 10%. Nevertheless, despite the fact that the revenue is growing for advanced packaging platforms such as fan-out, fan-in, stacking technologies, flip chip technologies, and system in package and embedded die, the near-term capex for the players is decreasing. We have seen a decrease between 2022 and 2023 of 17% and probably increasing. Again, here for advanced packaging, the equipment that will serve this application will need to be adapted. And it's a very interesting thing that is happening here, because we see a merge of two words, of SMT word from back end and on the front end word, where the equipment has to have a capability resolution that is close to the wafer processing, but being able to serve a die, serve and process the die itself. So it's a very, very interesting time to look at the industry and see the merge of these two worlds. Okay, so after this comment, I would like to give floor to John, who can overview the market shares for equipment vendors.
Okay, so this shows the market share for the total wafer fab equipment in 2022, and it's, yeah, our data is just below $100 billion, so it's a huge market now. But it's very clear, and there's nothing new here really. The top 9 vendors serve over 75% of the market, so it's pretty well consolidated at the top end. But there's this other categories. 21% of the market is actually served by small companies. We're tracking 144 of them. And actually, some of these companies are not that small. I'm sure they're small compared to Applied Materials, but there's I think a larger number of companies in there with revenues in that $150 to $250 million than most people realize. And some of those companies are actually growing very fast indeed, partly because they specialize in serving those specialty markets, which are starting to grow as fast and faster than some of the mainstream markets. So although we won't be showing too much about the other segment at the moment, it's something that we are tracking very closely, and we'll start to share more of that data throughout the year as we start to publish reports. Okay, looking at breaking that $100 billion market out by the different types of tool technology. The orange red is patterning, so that's going to be lithography, resist processing, mask making equipment, completely dominated by SML, 70% market share, no surprise there. Deposition, which is the green, the top two companies, Applied and Lam Research, taking over half the market. If you include Tokyo Electron in there, it's over 70% of the market. It looks like it's fairly consolidated. Blue was for the etch and clean, similar story, top three companies, 75% of the market. And something similar in metrology, which is the red-pink color there. Again, the story here really is that although these markets look like they're dominated by a handful of companies, this other section is actually really quite interesting and quite vibrant and diverse. There's a lot happening in there, and I think that's something which we all need to keep track of. So we mentioned in one of the earlier slides about really it's important not just to know the market size by tool type. It's becoming actually much more interesting to figure out what the equipment market is by application, because each of these applications, whether it's memory, advanced logic, or specialty or advanced packaging, they all have their own dynamics and their own characteristics. So it's really important to be able to keep track of these markets. So for memory and logic and foundry, by definition, these are huge markets, $52 billion for logic and foundry, $37 billion for memory. Almost by definition, the companies supplying equipment to those markets have to be the largest because the volumes are so huge. But at the bottom part bottom section of this slide, where we have specialty on the bottom left, it's only a $6 billion market, and also advanced packaging on the right, only $4 billion. I mean, they are still significant sized markets, and they are growing rapidly. And as you can see from here, other vendors occupy over half the market for both specialty and also for advanced packaging. I think the interesting thing here is that the large OEMs like the KLA, Applied, Naura, and ASML are quite active in these specialty areas. But and again, they're getting pulled into these markets, not just because they're getting larger, but because the customers are starting to order larger volumes, so they need the support from larger OEMs. Okay, so this is looking at the OEMs the vendor shares by region. US dominates. Their share has been going up and down over time, but US companies, KLA, Lam Research, and Applied Materials are dominating this market. Japan is very strong. They have three very large companies there that are driving their business. And we have Europe is in third place, but that's really just the Netherlands. Mostly ASML is in there. Other stories to talk about, South Korea is gaining share. There's more Korean companies are starting to win business, not just at home in Korea, but they're starting to export some of that success. China and Taiwan are stubbornly staying at very low levels of just 1 or 2%. So despite the investments and incentives given for Chinese companies to step up and grow their share of the market, it's been quite a long, slow progress. Another thing about this, just a point of interest, is that although the US has three of the largest OEMs, a majority of their equipment is not actually made in the US. A lot of it now is made in Singapore and Malaysia. So if you were to look at the distribution of equipment by region of where it's actually being assembled and manufactured, you have Japan would be number one. You'd have Singapore, Malaysia combined would be number two, and the Netherlands would be in third place there. Okay, so we're reaching a conclusion now. As we hope to have shown you, this is a very vibrant, diverse, fast-growing, or at least fast-changing market. And we're having, there's a lot of things in play right now. We've got this huge market. We have this relocation or reconfiguration of supply chains. We have issues with what's happening in Russia and Ukraine and US and China. And there's a lot to really look through to try and understand what's happening. But the main thing is to stay focused on the fundamental underlying drivers. And we have this, a combination of the end market drivers that are all solid and in place. One of those very few times in the semiconductor industry where we really have a clear technology roadmap. We have the device designs, we know which materials we need, we have tools that can get us to 3 to 2 to 1 nanometer. So it's one of those interesting periods where the technology is in place and which is driving huge amounts of investment to get to be the first company to get to 3 to 2 to 1 nanometer. And that's driving a lot of the equipment revenue in the industry. And as we said in the previous slide, the US is in pole position in terms of the number of, or the revenues coming in for its wafer fab equipment suppliers, followed by Japan, and then we have ASML in Europe. So these are really turbulent times, and it's really difficult to keep track of what's going on and getting the information you need to make the right decisions, which is why I recommend, right now, the most important thing is having the data, which is updated frequently, which will allow you or enable you to make the right decisions at the right time. There's a lot of money out there right now, but as we've seen this bit of a downturn, chip makers, OEMs, and everyone else is really spending that money very carefully. And with that, I will end this part of the presentation. If you have any questions, you can send emails to me or Tagwi after the webinar. So Yole has many products. So we have the Wafer Fab Equipment Market Monitor, which we've been talking about now. All of the data you see here is available in this service, and that's just being launched next week, and that will be available. This is a market monitor. It's part of a series of market monitors that Yole produces. So we have multiple monitors covering equipment to devices and technologies, which are updated quarterly, and a team of experts behind each of these services. And then we also have a range of reports which are one-off, usually published once a year, which give a complete in-depth analysis of the market and technology on a number of topics. I believe we have over 50 reports that are available.
Thank you, John. Thank you, Tagwi, for the presentation you have done today. It was really interesting. I just wanted to remind you that you can find the replay and the presentation on our website tomorrow. Also, don't forget the next Analyst Thursday. It will be on May 11th about smartphone focus on computing. The webinar is now ending. Thank you very much for your attendance. See you soon. Bye-bye.